Good evening, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up. And this wrap-up is for Thursday evening, the 22nd of April, 2021. Okay, the Biden administration today came out, and it finally is letting the press know what the tax plan is going to be. Remember, they've come out with one, and they're after people that have money, the rich. So what they want to do is first take up their top tax as it stands of 37%. I don't know many of the really rich that would pay that with all the deductions they have, but that's it, to 39.6%. Okay, it's not so bad because those people have ways to not pay that anyways. But where they want to kick them is on capital gains. Everybody gets capital gains in that category, right? They want to take it from 20% to 39.6%. So in other words, they get no tax break for capital gains. They're paying regular rates. Oh boy, do you think that'll pass? Let me give you my opinion. Big zero. Nothing going to pass on that. But it's an opening salvo. It gives you an idea where they're at. And now it's a known. How did the market handle it? Well, it broke on the news. And that's okay. The market was acting heavy to begin with. We've been talking about that. And today might have ended that up cycle where the market gets into one of these plateaus of choppy trade as it consolidates again. Will this change the overall path of the market? No. Is it going to pass? Well, I don't know, but I'm willing to bet rather heavy, and by saying this publicly, and that's all that's at risk here, is no. Okay, not as that is. Could something pass? Sure, but we don't know what that something is. Will this line up on both sides of Congress? To a degree. I have my doubts that many Democrats, there will be breakaways that won't want a 39.6% tax. That's just too much. But if you're in the Biden administration, they're early in it. They ran on a platform. They were going to do this. They did it. Whether it passes or not, his legacy is he made the moves for it. Can't argue that with the man. As you look at all these markets, there was a lot of today in the red with that. Market was acting good until that came out, and then after that, the market gave everything up. So those things happen. Let's take a look at PAVE. This is a chart that has gone sideways, and it's, I think at this point, just a consolidation. And while the trend has been up, I have doubts about one hanging around that. Why? Well, if we see this, the chart looks good. Higher lows, higher highs, not bad. It's the sideways action that's bothering me. And what the market's doing is on the brakes. It keeps finding the support at the 18-day average of closes, which is over the green, the 100, which is over the 200. Where's the resistance? It's the Bollinger Band, and notice how very sneaky they have taken their arms and they're crushing prices like that. That's when you get into the choppiness. I think the pros have a bullish bias, but I think they're out with today's action. Why today? Because you got up to the Bollinger Band. You hadn't hit that since the beginning of the month. I think today was the day where a lot of them just did that. We'll see. You would have thought, hey, infrastructure, here's the way to pay for it. It's going to go up. Market didn't quite act that way. When we get over to the, on PAVE, that I have here, I didn't have the slow stochastic, it's right here. With the slow stochastic, both numbers in 70, you're nowhere near embedding. You're overbought up to the first challenge of a Bollinger Band. It's not what I think, it's what the chart action's telling me. I think the pros came out today. In GameStop, you are still just drifting. Notice how this market has narrowed in this whole funnel since this craziness. But in all fairness to this stock, this was a stock that was down here. It got up, I know, all the way up here to 350, and it's kept a third of the value. That's not bad. We'll see what happens. From a charting point of view, I have no interest in the chart whatsoever. None. You've got the swing line up, you're under the 18-day average, momentum is flat. Now, the S&P Semiconductor ETF. Today, you had a higher high, a lower low. So let's just look at the market. It's been making a stand prior to today at the 100-day average without a trend. So if it rallies, I'd look for the resistance at the 18-day average. That's just what happened. On the way down tomorrow, if it goes down, I don't know, I'd look for support right here. But any break now under today's low will give you a pattern of lower highs, lower lows. In defense of the market, you'll be oversold or just about there, because any reading under 30 I'd view is oversold. So be an interesting day. I don't see anything right now. SMH has been in a downtrend, and I think the pros went short. If we come back to yesterday, the high yesterday was 249.28. The sell number, because you're already in, lower highs, lower lows, momentum down, bias down, is probably they're going to sell it in that 18-day average, looking for wherever the Bollinger Band is, because that'll be the closest number. So that's what I think they're doing. Now, if we look at today's action too, it's going to be interesting. If you look at yesterday, 249.28 to 242.10, and you look at today's action, you have an outside day down. If you take out the high of today, to me, that would be where the pros say, bye-bye, I want no part of the market. It's there as a stop, and I think they come out anyways if they can hit wherever that lower Bollinger Band is tomorrow. Should be interesting to watch tomorrow. I know I will. In the morning subscriber video, which I start recording at 8:40, I'll have my eyes on this chart, because that's what I think occurred. PODX. It's finding support, which we can see at the lower Bollinger Band, but it's a fully embedded reading, or is it? Notice very sneaky how the number got over 20. Now, I like the number to be over 21 to tell me that you've lost the embedded reading at the end of a day. But this is the first warning sign that any steady market tomorrow, that number on the bottom, the way the math works, it's going to come up. I think the pros are covering their shorts, okay? Or if they're not, tomorrow could be the day they do. In all fairness, you also had something else happen. You always got to keep your eyes on, there's only moving averages, swing lines, Bollinger Bands, and stochastics. If you can't watch those few things, I don't think you should be a charting person. If you're looking at it, you got the 100-day average in the 18. You got what today? A crossover. The 18 got underneath the 100. That's a bearish sign. It's also a sign where the resistance in the market is likely to sit. So we'll see if the market pays attention to that as well. So I'll be looking at the slow stochastic. I'll be looking to see if the market does rally, resistance at that point. But if the market just drops tomorrow with the 2008 reading and just drops, the pros won't step out. If they did step, I don't think they stepped out on a 20 reading, but I don't know what they're doing. It's too hard to call like that. ESGU, you lost the embedded reading. Well, look at that. That one you can't argue at all. That's pretty crystal clear to me. Both numbers, you can see how many were over the 80 level running it and down at 74, no question. So this beautiful uptrend, I think today the pros called it a day. That does not mean they're bearish. I think they called it a day. Does that make sense to you? XLE, oversold, in a downtrend, keeps hitting the lower Bollinger Band and not pursuing anything from there. I do not think you're attracting new sell money. Why? Because a 25 reading and a 29 are oversold. Embedded is one thing, oversold's a different thing. And that to me is like in my brain, we'll call that my computer system. That's a market not worth pursuing on the short side, and there's no reason to be long. When we step over to the S&P, what'd you do today? I'm a broken machine for you. Down, what does that tell me? Momentum's out. I think the pros came out here. And in all fairness, if you were playing this market, that signal came in near the high of the whole move. Okay, doesn't mean I'm right. What would throw the market back up? Probably taking out today's high and getting a sharp move up, but you have to do it right away. The longer it takes during the day, especially if you make lower lows, if you understand how the numbers of stochastics work, it'll work off the low point. So as you come back up, you got a bigger wall to climb. Always remember that. And if you have a bullish embedded reading and you start down, you got, even though it's breaking, it can hold on pretty well. So always keep that in mind. But once they change, turning that tide of the change is very difficult. I think the shot at the 18-day average is very real. Am I saying bearish? No, I'm saying the market's ready for a correction. There's a difference. EFA, emerging markets, finger crazy here. We had lost, if you come with me here, the embedded reading on Tuesday. Did you get it back? Nope. Watch. Well, there you go. I'm looking for the 18-day average at 77.62. It hit it on Wednesday, so you're just playing games now. You've already hit the downside target. The swing line is still up if you take a look, but you're in a corrective mode in momentum. So if momentum, and I think momentum leads price, not price momentum. I think the momentum's saying you're in a sort of a drifting pattern. By the way, if you closed in this market under 77.55, closed under it because 77.71 is the 18-day average, then I could target these markets as a potential. I never know where they're going. I can use the word potential right there to hit. GLD, you got an embedded reading. I think the pros are buying these breaks. I am wrong if you get the red line to close under 79. Barring that, I look for the market for resistance, 168.81 to 168.90, the combination of the 100-day average in the upper Bollinger Band. Gold miners, I am the same way. The market's in it's been in an embedded reading. I've been saying they're buying. I think the traders right here at this 37.23 to 27. Again, the combination of those two, that's where the big resistance is. Yeah, if it loses the embedded reading, you have to go back to the drawing board. But this is the first really prolonged bullish move we've had since back here at the beginning of March. Then we had that correction, and now it's coming again. And remember, we're trying to get that word reflation in the economy. Things to think about. And by the way, let me come back there. There's so much to talk about. This is a major moving average, a 200-day. So a lot of resistance should be expected there. It's not the equivalent of a 100 or an 18. It's a big boy average, and you'll hear the traders talk about it on Bloomberg, CNBC, and Fox. The chartists will talk. That's a key number. It is a key number. TLT, overbought, been a nice rally in a market that is now, if you will, overdoing it. You either embed or you're overdoing it. So I think the Johnny-come-lately should be a bit cautious in buying that market. FXE, well, as you can see, the market's getting a little bit of a slip back. You still have your embedded reading. This trend is not over in this market. This could still be one of those markets that wants to make it still to the upside. Now, if you haven't taken my Bollinger Band courses, I talk all these Bollinger Bands. Come on, the weekend's here. It's not expensive. You're going to learn things you've never seen in Bollinger Bands. It is not meant for the person that doesn't know what they are. Take my normal charting course first. But if you've worked with Bollinger Bands and you understand the concept and you want to get a real degree in it, this is it. Because you're going to see how I work the trends with the markets, what I'm trying to do. It's 13 videos, and my way of teaching is each chapter builds on the next. I explain it in detail. There's nothing left out. This is everything I know about them at this point in time. So how do you get it? It's simple. All you need to do is go to our website. From the website, under the word education, okay? It's right at the top. It's right there. It explains it. I've got a video there that I'm telling you what I'm doing in it, how it's all going to work. 13 chapters, each about 7 minutes long. Not long. You get the charting software to work with it as well. You'll see how it works because the way I work it is different than you're going to see a lot of brokers having worked it. But again, I have two things that I really study hard, stochastics and Bollinger Bands. I developed the swing line course many, many years ago. Wrote it so that my son, who was 13 at the time, could look at any chart and tell me if it's in an uptrend or a downtrend. You can teach your family members the same. I'm Ira Epstein. You have a great day.